If you had invested $10,000 into Nvidia 3 years ago, that investment would be worth over $100,000 today. But here is the uncomfortable truth. By the time everyone started talking about Nvidia, the biggest gains had already happened. The investors who made life-changing money were not the ones who bought after the headlines. They were the ones who bought when the stock was still under $5 and nobody was paying attention. Right now, something very similar could be happening again. 5 AI companies are trading under $5 today. All 5 are connected to major technology trends that could define the next decade. And most investors have never heard of any of them. I went through hundreds of small-cap companies to find these 5. The filter was simple: real technology solving a real problem. Real revenue or a clear catalyst that changes the trajectory. And a specific reason to believe the market is dramatically underpricing what this company is building. If you want to find opportunities before the crowd does, hit that subscribe button right now. This is exactly the research that changes financial futures. Here is what we are covering. The agentic AI company that grew revenue from $2 million to $46.8 million in a single year and is guiding for $360 million in 2026. The smart glasses company with zero debt, $20 million in cash, and active defense contracts from major aerospace companies. The post-quantum cybersecurity company with 200% revenue growth already deployed in military space applications. The EV charging infrastructure company with record quarterly revenue of $110 million, growing 45%. And the AI drug discovery platform sitting on $665 million in cash with a pipeline that could be worth billions. I am saving the most asymmetric opportunity for last. Let's get into it. Stock number 1, Resolve AI, ticker RZLV. Current price around $2.55. Most investors look at a $2.55 stock and immediately scroll past it. That reaction is exactly why this opportunity exists. Here is the reframe. Resolve AI is not a speculative startup with a vision and no revenue. It is an agentic AI company that just posted one of the most extraordinary revenue growth trajectories in the history of publicly traded technology companies. Let me give you the numbers that prove this is real. Revenue grew from $2 million in 2024 to $46.8 million in 2025. That is over 2,000% growth in a single year. But here is what makes that number even more extraordinary. In Q1 2026 alone, Resolve generated approximately $60 million in revenue. That is more than the entire previous year's revenue in a single quarter. And management has reiterated guidance for more than $360 million in 2026 full-year revenue. Annual recurring revenue entering 2026 stood at $232 million. That is not a projection, that is signed contracts already on the books. Here is what Resolve actually does. They build agentic AI systems that act independently, make decisions, interact with customers, and optimize business operations with minimal human input. This is not the chatbot AI of 2023. This is AI that actually does things, books appointments, handles customer service, processes transactions, manages workflows, without a human in the loop. The global agentic AI market is expected to grow at an extraordinary rate over the coming years. Companies that establish themselves early in this transition capture the best customers and build the switching costs that make them nearly impossible to displace. Here is my honest concern. Resolve is still a small cap with real execution risk. $360 million in revenue guidance requires sustained operational execution from a company that was generating single-digit revenue just 2 years ago. My takeaway: 2,000% revenue growth, $60 million in a single quarter, $360 million guidance, $232 million in annual recurring revenue already contracted. Analyst price targets of $10 to $15 on a $2.55 stock. This is one of the most explosive growth stories in the entire small-cap market right now. Strong buy. Stock number 2, Vuzix, ticker VUZI. Current price around $3. Most investors look at Vuzix and see a small, augmented reality company that has been around for years without ever breaking through. That narrative misses what is happening right now in the defense and enterprise markets. Here is the reframe. Vuzix is not just a smart glasses company.
It is a wearable AI platform that is actively winning defense contracts from major aerospace companies at exactly the moments when defense spending on AI-enabled visualization systems is accelerating globally. The most recent development tells you exactly where the real demand is coming from. Vuzix secured an additional customer-funded defense development contract from a major aerospace and defense supplier. The project focuses on advanced waveguide-based display systems for military applications and next-generation head-mounted display technologies. When a major defense contractor funds your development directly, that is not just a contract, that is a vote of confidence in your technology from people whose entire job is evaluating what works in the most demanding environments on Earth. Think about what battlefield AI-assisted visualization actually enables. A soldier in the field with real-time tactical overlays, target identification, and mission-critical data displayed directly in their field of vision. That is not science fiction. That is what Vuzix is building and deploying right now. The balance sheet is one of the cleanest in the small-cap space. Over $20 million in cash with zero debt. For a company at this stage, that is the difference between having runway to execute and being forced to dilute shareholders to survive. Here is my honest concern. Revenue remains small at $1.39 million in Q1 2026. This is still an early-stage company, and the path from defense development contracts to meaningful commercial revenue requires continued execution and patience. My takeaway: zero debt, $20 million in cash, active defense development contracts from a major aerospace supplier, and a wearable AI platform positioned at the intersection of augmented reality and military technology. At $3, this is a high-risk, high-conviction position for investors who understand they are investing in what this company could become rather than what it currently generates. Drop a comment right now. Had you heard of Vuzix before today? Because most investors walking past a $3 stock have never looked at what is underneath it. Let's keep going. Stock number 3, Seal SQ, ticker LAES. Current price around $2.87. Most investors have never heard of post-quantum cybersecurity, and that ignorance is going to become very expensive for the companies and governments that wait too long to address it. Here is the reframe that changes how you see this company. Seal SQ is not building security for a hypothetical future quantum threat. It is building security for a threat that every major government and military on Earth has already concluded is real, imminent, and requires immediate investment. When a sufficiently powerful quantum computer comes online, it will be able to break every encryption system currently protecting banks, government communications, military operations, and corporate intellectual property. The question is not whether this happens. The question is whether the world will be ready when it does. Seal SQ builds the semiconductors and security systems designed to withstand that moment. And they have already deployed that security in the most demanding environment possible. The company recently completed a pilot project with the Swiss Armed Forces Space Command, testing secure communications infrastructure in actual space in an actual military environment where failure is not an option. The revenue numbers confirm that demand is accelerating. Q1 2026 revenue came in at $4.1 million, up more than 200% compared to the same period last year. Management is projecting full-year revenue growth of 50 to 100%, driven by expanding partnerships and increasing adoption.
and the strategic partnership that validates the entire thesis. CLSQ formed a collaboration with Trusted Semiconductor Solutions to develop made-in-America quantum-resistant semiconductors specifically for defense and government applications. In a world where semiconductor supply chain security is a national priority, that positioning is not a small detail. It is potentially a very large competitive advantage. Here is my honest concern. Post-quantum security is a threat that has not fully arrived. The market has not fully priced in the urgency yet, and CLSQ is a small company that will eventually face competition from much larger cybersecurity players when the market matures. My takeaway: 200% revenue growth, Swiss military validation in actual space, defense partnership for American-made quantum-resistant chips, and the structural technology shift that every government, financial institution, and corporation on the planet will eventually need to address. At $2.87, this is one of the most asymmetric cybersecurity plays under $5. Strong buy. Stock number 4, EVgo, ticker EVGO. Current price around $1.90. Most investors look at EVgo and see an EV charging company in an industry that has faced serious headwinds. That framing misses the infrastructure story that is developing underneath. Here is the reframe. EVgo is not a bet on any single automaker. It is the picks and shovels play on the entire electric vehicle revolution. Every electric vehicle sold, regardless of manufacturer, needs somewhere to charge. And EVgo operates one of the largest public fast-charging networks in the United States. The most recent numbers tell a clear story. Record quarterly revenue of $110 million, up 45% year-over-year. Network expansion to more than 5,200 operational charging stalls. Customer accounts reaching approximately 1.7 million users. And here is the government validation that changes the funding picture entirely. The Department of Energy expanded EVgo's loan facility to approximately $750 million. That is nearly 4 times the company's current market cap in government-backed funding available for infrastructure deployment. When the US government commits $750 million to your expansion, that is not just financial support. That is a statement about how critical this infrastructure is considered to be for national energy security. The AI connection that most investors miss. Modern charging networks are not passive infrastructure. They are intelligent systems that manage grid load, optimize charging schedules, predict demand, and communicate with vehicle management software in real time. EVgo is building AI-enabled smart charging infrastructure, not just plugs in the ground. Here is my honest concern. EVgo is still operating at a loss, and the path to profitability requires sustained growth in EV adoption and utilization rates that are not guaranteed. Political changes in EV policy could affect the funding environment. My takeaway: record revenue growing 45%, 5,200 charging stalls, $750 million in DOE loan facility, and AI-powered infrastructure positioned at the center of the American energy transition. At $1.90, this is the most infrastructure-backed play on this entire list. Stock number 5, Recursion Pharmaceuticals, ticker RXRX. Current price around $2.93. This is the one that most investors look at and say, the revenue missed expectations, so why would I buy it? And that is exactly the wrong question to ask about this company. Here is the reframe that matters. Recursion is not being valued on current revenue. It is being valued on the probability that its AI platform becomes the operating system for drug discovery at scale. And the evidence that this platform works is building quarter after quarter. Recursion combines artificial intelligence, automation, machine learning, and biological data analysis to transform how drugs are discovered. Traditional drug discovery takes years and billions of dollars to bring a single treatment to market. Recursion's platform runs millions of biological experiments automatically, analyzes the results in real time, and identifies promising drug candidates at a speed and scale no human team can match. And here is the balance sheet that makes this company uniquely positioned to execute on that vision. Even after recent spending, Recursion holds more than $665 million in cash. That provides runway into 2028 without needing to raise additional capital.
For a biotech company, that is not just a financial cushion, it is a competitive weapon. While smaller AI drug discovery competitors struggle to fund their pipelines, Recursion can run experiments, advance programs, and attract partnerships from a position of financial strength. The partnership profile validates the platform. Recursion has attracted collaboration from major pharmaceutical companies which do not commit to AI drug discovery partnerships unless they have done serious due diligence on the underlying technology, and management recently highlighted encouraging safety and pharmacokinetic data from experimental programs, along with advancement across multiple clinical stage assets. Every clinical milestone de-risks the pipeline and moves the platform closer to the commercial validation that could permanently re-rate this company's value. Here is my honest concern. Drug development is inherently uncertain. Even the most sophisticated AI platform cannot guarantee clinical success, and the path from platform technology to commercial drugs is long and expensive, even with $665 million in cash. My takeaway? $665 million in cash. AI platform validated by major pharmaceutical partnerships. Multiple clinical programs advancing, and a technology that could compress the most expensive and time-consuming process in medicine into something that happens at machine speed. At $2.93, this is one of the most intellectually compelling AI platform plays under $5 available right now. Strong buy for investors with a 3 to 5 year horizon. Let me bring this all together. 5 stocks all under $5. 5 completely different AI businesses. 5 specific reasons the market is dramatically underpricing each of them right now. If I had to rank all 5 for new money today, here is exactly how I see it. Number 1 is Resolve AI. 2,000% revenue growth, $232 million in contracted ARR, and $360 million in guidance. The growth trajectory here is unlike anything else on this list. Number 2 is Recursion Pharmaceuticals. $665 million in cash with an AI drug discovery platform that major pharma companies have already validated. The cash alone at current prices deserves serious attention. Number 3 is Seal SQ. 200% revenue growth, Swiss military space deployment, and a structural cybersecurity shift that gets more urgent every year. Number 4 is EVgo. Record revenue growing 45% with $750 million in government-backed funding and AI-powered infrastructure at the center of American energy transition. Number 5 is Vuzix. Highest risk and highest potential upside from defense development contracts and a zero-debt balance sheet. Here is the investing truth I want to leave you with today. The investors who made life-changing money on Nvidia did not buy it when it was obvious. They bought it when it was under $5 and everyone else was scrolling past it. Every stock on this list is under $5 today. All 5 are building technology that could be essential infrastructure for the next decade of the AI economy, and the market has not fully figured out the story on any of them yet. That is where the opportunity lives. Disagree with any of my picks? Tell me in the comments. Which one would you buy first? Which one do you think is the biggest trap? Subscribe for weekly research on where the next big AI opportunity is hiding before everyone else finds it. No sponsors, no fluff, just the analysis. See you in the next one.